Hi, Tom Gengler, Business Development Officer.
And John Flemmer, Commercial Loan Officer.
We both work at South Point Financial Credit Union, and today we're going to talk about credit. Reasons why it's important for you and how it can benefit you as you start your financial journey in life. John, when I talk about credit, can you talk a little bit about what credit is and maybe the different forms of it?
Yeah, credit's going to be any time that you are borrowing funds you don't currently have. It's giving you additional purchasing power versus the cash maybe you have in your wallet, maybe the funds you have on your debit card that are already in your checking account. Anytime that you're using credit, it's going to be giving you that additional purchasing power, whether that's to buy a home, whether that's to buy a car, even a credit card, using that to swipe at a store when maybe you don't have the funds or don't want to use the funds that are in your checking account. So those are going to be some examples. Student loans are going to be another example. You know, if you're going to school, most people are going to need to take out student loans to be able to go to school.
I've heard the term secured, unsecured when it comes to a loan. Can you talk about what that is?
So the major difference between a secured loan and an unsecured loan is going to be collateral. So collateral is going to be on a mortgage loan, a house. Collateral on an auto loan or a vehicle loan is going to be that vehicle. A credit card almost always will be unsecured because there's no collateral. The only exception is going to be a secured card would be, say you give $300 to your bank or your financial institution, they hold it in an account, and then they give you a $300 credit card. Essentially, you've pledged the funds now to hold that limit for your credit card. So that would be an example of that. But an unsecured loan is going to be something where a credit card, maybe a personal loan, has no collateral attached to it.
One thing that gets talked a lot about is your credit score. There's a lot that goes into your credit score. But John, can you give us some general topics about what your credit score is?
Yep, so credit score is going to be a range anywhere from 300 to 850. There's 3 different credit bureaus that are going to give you a credit score: Experian, TransUnion, and Equifax. There's a lot of factors that are going to go into what generates a score, but as it looks like, and as you can see from the color code, the higher the better. You want to try to get into that green sections because it's going to give you more purchasing power. The higher your credit is, the better off you'll be, and the more you can qualify for in most cases.
So the credit score itself gets calculated with multiple factors going into it. John, can you talk a little bit about some of the factors that go into making up your credit score?
Yep, the major thing that's going to be looked at is your payment history. That's going to be 35% of your credit score is going to be your payment history. So making sure that you always are making your payments on time. If you ever get more than 30 days late with a payment, it's typically going to be reported on the credit report. It's going to show negatively on that, and you're going to see a negative impact, and the score is going to be decreased as a result. That's going to be the biggest thing. The next one's going to be the balances that you owe. So your credit cards are going to be the major one that plays into this. If you have a limit of $1,000, trying to keep that at that 30 to 40% limit or balance of that limit so that you're not using the full amount of it. If you're maxing out your credit cards, you're actually going to see an adverse impact on your score, even if you're making your payments on time. That's going to be 2/3 of your credit score right there. The other third is made up of 3 different factors. First one is going to be the length of your credit history, so how long you've had credit open. If you have a credit card that's been open for 5 years, 10 years, I mean, that's going to have something that gives you a very long timeline to benefit your credit. Whereas a 6-month credit card is really not going to have much impact on it yet because it just started. Another thing is going to be variety in the type of accounts that you have. So having a car loan, having a credit card, making sure there's more than just one type of credit to show that you are able to make payments on different types of loans and different types of credit. And then the other one's going to be making sure you're not opening a lot of things at the same time. So spacing out when maybe you're buying a car, buying a house, or not taking out a credit card at the same time as doing either of those things, just to make sure you're not having your credit pulled repeatedly in a short amount of time.
And that makes a lot of sense. I know when you start getting out in the world, you do get solicitations for credit card offers. Going to big stores to purchase a larger item, you'll be solicited an offer to get a credit card, and it's important not to take out a credit card every time that happens. Even if you're saving 10% or they're offering 0% financing, before you know it, you could have way too many credit cards to be keeping track of and being a negative impact on your credit score. Mm-hmm. The other big thing to talk about is credit reports. So a credit report is going to have a lot of information, your history of everything you've done, from your first credit card to your most recent car loan. John, as a loan officer, as a lender, you're going to pull people's credit. You're going to see their credit report. What are some other things you're going to look at on there?
Yep, so your credit report's going to have all of your personal information. It's going to have your name, your social, your date of birth, address, your work history, your job history, your address history, stuff like that are all going to be on your credit report. But as a lender, the main thing that we're looking at is, yes, your score, making sure the score is at a positive spot. But within that, too, we're going to see payment history. So when we look at a credit report, there's typically going to be a highlight on something if it's had negative history, whether that's a late payment. Maybe you have an account that got to a collection or a charged off status, bankruptcies, different things like that are going to be flagged so that we can see them and maybe have that conversation about what happened, what led to that. So that's one thing that we're looking at. Another one's going to be the credit utilization. We're going to be looking at what your limit is and then how much of that limit you're using. A lot of credit reports will also show us what the highest you've ever taken that limit to. So maybe you have a $1,000 credit card and you've used $1,100 at one point. You were over the max. We can see that, and again, maybe that spurs us to have that conversation with you about what led to that and how to properly use that. So those are going to be some of the major things we're looking at.
Now, building your credit is important, not only just for the chances to be approved for a loan, but it's also important in other factors. These days, if you move out of the house and get a rental, a lot of times that landlord's going to pull your credit to see how fiscally responsible you are at paying back. Your cell phone, insurance, there's many other places out there that will pull your credit to check on those things. So it's more important than just getting approved for a loan to having positive credit. John, when it comes to specifically being approved for a loan and maybe the interest rate, what's another important reason why to have quality credit?
Yeah, it's going to, again, purchasing power is going to be one of the major things. The higher your score, the more you can qualify for, typically, as long as you can afford it. That's another thing that we need to make sure that we reiterate. When you're applying for credit, make sure you can afford it. Don't apply for something that you can't afford. But with that, the higher your credit score, the better your interest rate is going to be as well. If you're looking at buying a vehicle and you have an 800 credit score, you might get as low as a 3, 4, 5% interest rate, where a 600 credit score, you might be looking at 15 to 18%. You talk $10,000 to $20,000 over 6 years, that can be a very large change in your monthly payment, and then you take that over that long time frame, you've paid a lot more interest than you could have with a better credit score. So it's going to have a large impact at that moment, for that monthly payment, and then over the long span of that loan. So
there's certain steps you need to do to start building your credit. We're going to go over those steps here next. One of the most important steps to building your credit on the right path is having a job. For any lender to approve you for a loan, they have to have income. Having a job and having income will get you on that path right there. The other thing we suggest is opening a checking and a savings account. You need a way to organize your finances. You need a place for your paycheck to go in. You need a way to pay your bills. And having a checking and savings account will get you on that track right there. The other thing is start putting bills in your name, whether it be a cell phone, whether it be starting insurance. You will get in the habit of making a monthly payment, making these payments on time. That responsibility of doing things the right way, making your payments on time, is only going to benefit you in the future right there. John, when it comes to specifically building up your credit score, what are the steps that a person can do to do that?
Yeah, a good place to start would be, maybe it's a student loan for that first loan or first credit, but it could be that secured credit card we talked about earlier, putting a couple $100 in an account and then having that secure your first card. It doesn't mean you always have to keep it as a secured card. Maybe, you have it for 6 months, a year, and then go back to your financial and say, hey, can I switch that to an unsecured card? And maybe that's you're at a point where you could do that. Another thing would be maybe your parents put you on as an authorized user on one of their credit cards. You don't actually have the card, so you don't have the credit available to you to use, but you actually get a positive impact on your credit score as long as they're using that card correctly. So that would be another way that sometimes we've seen our younger members get started.
So now you've started to build your credit score. The next step is to increase it and maintain it. Obviously, there's certain steps that you can do that. Besides what we already talked about, paying the bills on time, keeping your debt balances below a certain threshold, what are some other big key takeaways to improving and maintaining a quality credit score?
Again, only opening credit when you need it. Don't open cards just for the sake of it. Don't buy a card just for the sake of it. Trying to make sure you're only requesting credit when it's something that you need. Trying to live within your means. Don't try to get stuff that you can't afford. Once again, spacing out when you're getting those credit reports pulled so that they're not all at the same time. Because if you are, say, buying a house, getting a car, pulling a couple credit cards out all at the same time, you're going to see a negative impact on your credit, even if you're making those payments on time. So try to space those things out so you're not doing them all at once. And then one of the major things we can tell you too is seek guidance if it's needed. If you have questions, don't just assume things. Don't just hope for the best and just keep moving forward. Ask the questions. If you have the question, you're probably not the only one who's had the question. Just give us a call, stop in, ask us the question, because we certainly are here to help you, and we want to make sure that we do so when we can.
Unfortunately, in the world we live in today, there's a lot of bad stuff that can happen, from fraud, scams, identity theft. Luckily, though, when it comes to your credit, there's lots of options out there to help protect you. John, can you give us a little information on that?
Yeah, absolutely. First thing that you need to make sure you do is you keep your information secure. Don't be handing out your passwords. Don't be handing out your usernames to anybody you trust. I'd say spouse is probably about as far as I'd be willing to go, but trying to make sure all of your information stays secure. Another thing that Equifax had that major data breach just a couple years ago. They requested that people put a freeze on their credit report. It's a breach that impacted millions of people, and it's something where if you do put a freeze on your credit, nobody's able to pull that. If we as a financial try to pull your credit, we'll get notified that there's a freeze on it, and we won't actually get any information. So that's something where you would actually have to call the bureau to lift that for typically a 24 or 48-hour period for us to even be able to pull your credit in. Another great one is annualcreditreport.com. It's something where you can get all your information once a year for free, right at your fingertips. You can see the limits, you can see kind of your history, you can see how you've handled things in the past, if there's something that's in a collection status that maybe you aren't sure where the payments should even be going. Typically those credit reports will have that, where one that we pull doesn't have as extensive of information. So annualcreditreport.com, an absolutely wonderful tool to be able to use.
Sooner or later, that day is going to come where someone's going to want to apply for their first loan. Maybe it's a credit card, maybe it's a car loan. But can you talk us through what that process is like? What are some questions that a lender would ask me, and maybe what are some questions I should be asking the lender?
Yep. First and foremost, I would say decide how you want to apply. You can apply online, you can apply over the phone, you can apply right in person. Figure out which is going to be most comfortable for you. And then next thing you want to make sure you have is income information. Qualifications for a loan or a credit card, income is going to be one of the major things that we're looking at. We have to make sure that you can afford what you're looking to do. So whether that's your last 2 pay stubs, your W-2s, if it's a mortgage, you might need your tax returns. Making sure that you know how much you make so that we can make sure that that's something that you qualify for. But again, through the process, once you've applied, it's something where we're gonna have that conversation with you. We're gonna ask you questions. We're gonna make sure that it's a smooth process from start to finish. We want to make sure if you have any questions that we make sure we answer them, and we'll probably even give you more information than you care to have, more than likely. But we want to make sure that what you're looking to do is what we're helping you with, and we stay on the same page through the process.
Wonderful. So just to kind of wrap things up, the objective today was to learn about credit, what it is, how it pertains to you, how it affects you, and the right way to go about it. One thing to keep in mind is credit is different for everyone. Mm-hmm. From our bills to our loans to our credit score, how we do it. There's certain steps that we talked about here today that'll help get you on the right path. But keep in mind, things take time, and to reach out when help is needed. Here at South Point, we want to be a resource for you when you have questions to guide you down the right path. Mm-hmm. And we hope that you have some great takeaways from today's video. So thank you for watching.